This is our Forex blog for June 26, 2013. And one of the things that we're doing with our currency indexes is actually creating, um, in the past we had huge scripts that would create these synthetic currency symbols, and they would just use an astronomical amount of memory and CPU to keep them track. So we've actually built them into the data feed, so that if you want to see the Euro index, and this is a 5-minute chart, if you want to see a 1-minute chart, you hit 1, and it automatically changes. If you want to see a 15-minute Euro dollar index, it'll load 15-minute data and calculate. If you want to see daily currency for the Euro. And so this is going to really drastically cut down the memory. If you have all 8 pairs, it's going to probably take about 15 to 20 megs versus close to 150 to 200 megs with my old script. So basically, in a nutshell, these currency indexes make trading very easy because you can very easily see all the different individual currencies. That's the euro, here's the dollar. With the new version, since it's actually a data feed, you can put our actual studies on this, whatever ones you want, including even now pivots. You know, this is another way that I today have used these to trade that will actually show you pivot levels. And when a currency's over its pivot, which is the yellow line, it tends to go up. When it's underneath it, it tends to go down. These also act as support resistance areas. In other words, the dollar was chopping around here. It spent a good amount of time underneath its pivot, and then it worked its way up to the next pivot level. The fact that it stalled here and double topped and failed to go higher, it makes a very highly probable counter trend trade right here. And this is going to be one additional way to find support resistance. Also, like I said, the pivot level in white is a good filter, as is the hourly moving average. If it's above the pivot, it's more bullish. It's likely to go up. And so when you have this nice little wedge pattern breakout right here, or even if you want to be a little bit more conservative right here, very high probability trade. And so basically how you use this is you anticipate the direction of one currency and then trade it versus whatever is the weakest. So the dollar's quite strong here going into 1. It's above its pivot. You want to look for a currency that's weak. Now the euro is extremely weak for the day, but it's trending up right now. So let's take a look at some of the other ones to see how it did at that time. At 1, the pound is also weak all day, and it's just hovering sideways. It's not trending up. So that means that it doesn't take a rocket scientist to know that you want to be basically selling the pound dollar after 1. And you can use any time frame charts, really. I'll put on, 5-minute chart on here. You can see 1 o'clock comes around. Price is going from around 53.24. So it fell about 25 pips during that next hour. Nothing spectacular. 1 o'clock's kind of a dead time. Let's take a look at when the dollar double topped and failed at a major pivot, likely reversal area. You get looking for shorts here at 8. This one's obviously trending down. You don't want to be trading against this. Let's see how the yen's doing at 8. Alright, so at 8 o'clock, the yen is above its pivot, which is good. It has been trending down, but for about 2 hours. So when it breaks this trend line a little bit after 8, you can consider a dollar yen sell around 8 to 8.15. These are kind of trades that are likely to give you 15 to 25 pips. So a little bit after 8, you look at this chart, you've gone short right here around 97.70, and you can see it fell 30 pips really in about 15 minutes. All preceded. Notice the time of this breakout of this trend line right here. It's 8:10. That's when the trend line of the yen broke out. What is 8:10 on this chart? Right here, this bar. So with the currency index, it was very clear that the yen was very likely breaking out. The dollar was very likely double topped at a likely reversal area. And so you got into this trade actually even before 97.70. In the dollar yen, most people don't like to trade it, but occasionally when one's strong and one's weak, you're going to get 20, 30, pretty predictable pips from it. Let's take a look at some other currencies, maybe the Australian. Okay, 8 o'clock. This one's above its pivot level. You can add the hourly moving average to this too using our containment bands. And notice, since this will soon be available to our traders, it is built into the software, so most of our studies will work on it. You can put any settings you want, any indicators you want, rather than the ones that I built into the other one. So containment bands, I like to see what the hourly moving average is. We'll just leave the containment bands on there as well. The hourly moving average, it's above it. And so when it's above it, the trend's up. You can see that, let's move them and line them up so they're both at the same time. You can see at 8 o'clock, this one made a pullback, tried to rally up to a resistance area, couldn't get above it. Notice how a lot of these pivot levels, even though this is not a currency that really exists in nature, how these act as support resistance. And so these are going to give you a lot of different trades that you don't have now in the current existing version I released. We didn't have daily, weekly, or monthly pivots before, but we will soon have those. Right now we only have daily data working on this new built-in version. So again, this one coming up to 8, this trend is up, it pulled back, it made a little 1, 2, 3 low right here, and it's breaking out at 8, going back up, resuming the direction of the previous trend. So when this one's failing a little bit before 8, it's a pretty much high probability trade right around 8 to be buying the Australian dollar. Obviously it fell afterwards. Let's take a look at this. 8 o'clock. If you're actually looking at this chart, you have a double bottom here, little range it's in here. A lot of times when you see false breakouts underneath lows, when bars come up, you can really get into the trade right here if you really believed it to go up. But according to that other chart, it was a little bit after 8 where it was really confirmed. So if you bought this somewhere around 92.84, you can see it went up 50 pips. And more than likely you would have got out of part of your trade here and part of it here. But regardless, the key to trading is small losses, big wins. And when you have, let's say you bought this breakout right here, you could at the very least put your stop underneath the swing. And if you got out somewhere in this range right here, you can see you made 2.5 times more profit on that trade than what your risk was. And if you're a little bit more aggressive trader, you might have taken this approach. You might have got into this trade when it went over the high right here and put your stop underneath the bar's low. You can have super tight sub 10 pip stops using our methods. A lot of people get in and they get out. They might buy this breakout here. It's kind of chopping around. You probably get out somewhere in here. Buy this next one. It get out here. Scalp 20 pips, 5 pips, 15 pips, whatever. However you want to trade with these currency indexes, you can. But this is one additional way you'll be able to anticipate future price direction. Anytime a currency hits one of these pivot levels, which no one has now except me, and does a little double top at these, and this is R3, so this is if you've ever used pivots before, markets most days never hit R3. When they do, they typically reverse at and slightly beyond it. Very high probability reversal here. The dollar at 10 o'clock has fallen dramatically. It's really near the low of the day, and you can see a little bit after 10 it breaks out of this little wedge pattern right here. Pretty high probability Australian dollar sell after 10. So I'll finish today's blog going back to that same currency. After 10 o'clock we're looking for sells, and you can see right here the little trend line gets broken. It's in a little wedge pattern. Great place to get short, and you can see it fell significantly more than what your risk would be. If you shorted there, you might put your stop above here. You made 4 times or more what your risk is. So that's the key to trading. Don't worry about winning percentage. Some days you might have 2 or 3 trades in a row, but if you catch some 20 to 50 pip wins and your losses are 5, 6, 7 pips, and you have a bunch of break evens and a couple 2 to 3 or 4 pip losses, one of these trades gets back 3 to 4 losses if you happen to have a horrible day and have 4 losses. But you can see how predictive this currency index is, and you can get it for free by opening a live account with one of our brokers.